Welcome to daily market analysis, and this is for tomorrow, October 23, Wednesday 2024. Let's look at the charts first. So this is the Bollinger Bands on the daily on Nifty, which is expanding. It was expanding yesterday also, clear indication of long move, and today it is small confirmation to that. And the candlestick, if you see, it's a wide range bearish candle. The second consecutive day of big fall, and market has lost 1,400 points these 2 days. Right, and it's below the median and below the 20 exponential moving average. Banknifty charts also showing a very wide range. 1,400 points lost in Banknifty, not in Nifty, sorry. But Banknifty also showing an expansion of Bollinger Bands on the downside and wide range bearish candle. 2 days of continuous fall. 1,400 points, 700 each. Big fall. Today's fall is 309 points. It's 1.2%. Very big cut. And Nifty 700 points, lost 1.4%. That's a kind of move. Definite bearishness is expected for the expansion on the downside. However, we tested this low of 50,000 is likely, and the breach of that also could be possible. But relatively, Nifty seems to be more weak than Banknifty. Banknifty is taking this slow. It was taking the slow pace while going up also, while moving down also. As of now, it's taking a slow pace. Okay. Let's now dig further. So that's all candlesticks value. So the next point would be yeah, there is a head and shoulder pattern. We know that. And that neckline was somewhere here, right at the 24,700 zone. It was breached, and if you calculate with the help of the height of this head, and shoulder, the height of that, then it's likely to go near at least 2300 or 23,000 also. It's possible, right? So clear bearish pattern, chart patterns and candlesticks and Bollinger Bands and moving average resistance, everything indicates more bearishness. Let's also look at the momentum. Momentum also has tipped in the sideways. From the sideways, it has fallen to the bearish zone on the Nifty, and it has fallen to the momentum side. It is already in the sideways zone, so it has not fallen to the bearish zone because of Banknifty. But Nifty momentum slipped to the side, the bearish zones of RSI less than 40. Bearishness is increasing in strength, right? In the case of Nifty and Banknifty also. Right? Bearishness, in the case of Banknifty, it's not increasing, but it's bearish, so it is not recovered yet. So Nifty seems to be more bearish than Banknifty, and both of them has lost the momentum and trend, while in the case of Nifty, the momentum and trend is in poor shape. It's wrong to the bear zones for sure. That's what has happened. Now we will, for the trend indicator, we are using the ADX, momentum, it's the RSI. Now if we look at what are the things happening in the market, we can understand that here. Nothing performed today. It is all red, everywhere it's red, right? Mahindra got sold too much. Call India, another enterprise got too much. There is Banknifty, PNB, Canara Bank, PFC banks got hit badly. And otherwise, if you see, mid cap has got hit badly. That's a correction of 8% on the mid cap, and another correction of 8% on the small cap from the top. So it's a 4% correction on the small cap today, and 2.6% correction on the mid cap index. So total market has hit. Sector indices, if you see, all of them were at big hit has come in the metal, right? Sharp fall of 3%. Auto also did badly, 2.5%. 1.2% pharma. Realty also hit badly, 3.4% down. So all the sectors badly hit, especially the metal, realty. Auto, done really bad. That's about sector indices in broader markets. And if you look at the heavyweight stocks, all have done badly except for ICICI Bank, which showed some green. But that green is a dodgy gravestone, which indicates that it cannot sustain. ICICI Bank found 1 point, and Reliance badly hit once again, 2.9%. That's a steep correction. Once again, it seems to be coming back It's 550 points. It's 17% correction by Reliance. It's a crucial support zone. But Reliance is approaching 2% gone. So all the heavyweights are doing badly except for ICICI Bank. So in fact, if you look at the Reliance has fallen to the bear zones. HDFC sideways, ICICI sideways, Infi sideways. Almost following the bear zones. TCS in bear zones, Kodak in bear zones. So all the heavyweights are in bear zones. And in the short term, we're talking about short term charts and daily. Or even, the auto has fallen to the bear zones, FMCG has fallen to the bear zones, reality has fallen to the bear zones. So all the major sectors, bottom markets, big heavyweights, they're all falling into the bear zones on the short term daily charts. So bears have tightened the grip and they have taken control of these for sure. Now let's look at the support resistances for the next day. So here you go. We'll switch up this point bands and then so the major resistance is to climb above the 25,000. It's a first hurdle because it's multiple confluence of resistances coming in there. Previous resistance, 20 exponential moving average, 50 exponential moving average, all comes in the 25,000 and 25,100 that zone. So clearing that's the first hurdle. After that you have the 25,433 where you have previous resistance and then gap at 25,740. Outside the first support is all. The major support was 50 exponential moving average was breached but managed to close above that, but doesn't help. Next support will come at only 24,000 big rounding number, and after that 23,900 has got a previous string lows, so that's a good support. So if that 24,000 and 23,900, 800 were the Fibonacci 50 and 200 exponential moving average, and not the Fibonacci 50 and the previous string lows. If that is breached, it can go up to 23,300 by the 200 exponential moving average and Fibonacci 61 and the previous zone it can go to. So 24,000, 23,000, that's how it is. If it cannot sustain this 24,500 where it is close today, nearby. So if that does not sustain, then it's likely to go up to 24 and then 23. So correction that way would be only 10 to 11% only if it goes to 24. For the down, 12%, 13%, that's all. Even that's also not happening if you just look at the, see, even if it corrects, it's only 12%. Even if it corrects to 200 exponential average, just 12%. As of now, correction is around 8%, no, 7% on the Nifty, and the Banknifty is on 8.4%. That remains visible. So let's look at the Banknifty's levels. The first resistance will be take out this 50 moving average, but basically 51,850. 20 exponential moving average has played at first. That is clear. Then the gap is there. 52,000 big rounding number is there. 52,800 is there. Neckline of the rounding pattern is there at 53,340. Gap is there. 53,750. So those are the upside downside. First support coming at 51,115. So 51,000 is a major support because that's a 100 exponential moving average is still not lost. After that, it can fall down to 50,000 nearby zones where there is a confluence of previous string low and a closing low of this October 7th. And it's a Fibonacci 50 retracement level also. So 50,000 once it is lost, it can go to 200 exponential moving average by the 49,370. Right? So Fibonacci 60 retracement level and 200 moving average resistance all confluencing there here. Right? So 200 moving average of 49,300 is lost, then 49,000 is the major one, right? That is which is go to 48,640, which is the previous resistance zone where the breakout happened earlier. So that's a support resistance level. Let's make a note of this. Tomorrow is the Banknifty expiry. Let's study that. So PCR is negative. Levels highest call writing is at 52,500. Highest resistance is at 52,000 and 52,500. That's where supports seem to be at 51,000 and then 50,000. No, 49,500, 50,000 or so. That's one of the highest put three places: 51,000, 50,000, and 49,500. In between, we have a small support at 50,500. Those are the levels of support. Okay, so move can go as low as 49,000. So supports are between 49,000 and we can say 43,000. That's the levels for the next day. Market will fluctuate this. Now, one thing you forgot to say is the volatility index. That's the India VIX has spiked up today. Spiked up around 4.5%. So that's a big spike. It is now trying to climb into the medium volatility levels from the low volatility. So VIX is spiking means something is wrong. And the market is falling. VIX rise because fear and greed. Index is what VIX is all about, right? So that's about that. Now, institutions have been selling for crazily, especially the foreign institutions. And yesterday also they were selling 2,000 crores. So in total they have sold at least 80,000 plus crores, 50,000 plus crores in just a matter of 2-3 weeks. The entire October was selling by the fires that we had seen. Fundamental people say that it's because of the shift of money towards the Chinese market, which is attractive. The US market is showing some red on the Dow Jones yesterday, but Nasdaq remains to be on the top. So still is not very far from the all-time highs. Gold is at all-time high. It's breaking out and then going crazy. So that is a concern. Oil weak day, but it is under control below the 70. So it's okay for oil importing country like ours. But US markets also at the top. In spite of the geopolitical tensions because of the Israel war, US markets are at the top green. But there's some red that has happened yesterday. Just so we'll have to see tonight as to what happens. So this is a red, but that's not too far from the all-time high. Nasdaq has managed to close green, but SPX, S&P 500 and S&P 500 and Dow Jones are showing some red at the very top. Right? So geopolitical tensions remain there. So just to sum it up, it's bearish. We know a lot about that. Medium-term bearish is about stay safe and make note of those levels on the downside supports, because the reversal will come in any time, any point in time from those places. So if you're playing short, also play it safe, and there's no way you can play it long until the price moves about the trading expression moving average at least. That's all I have. Thanks for watching. Happy trading, happy trading, happy investing. Bye bye.